Everybody, good morning. Welcome back to the show. You know, one of those mysteries of my office. This has nothing to do with what I was going to talk about. I was late for a second because I was doing my morning ritual before I go on the show and visited the restroom real quick to empty the bladder and noticed that the bathroom door was broken in my office and showed the had to show the boss man real quick, but it's like a mystery because it wasn't. I don't think it was broken before I went to Jacksonville, and there's no like marks on it where something hit it. There's no rub mark. There's no. It's like, how the heck did it get broken? I mean, it's like the door itself is like split at the top, and it doesn't close very good, and it doesn't open very good. I was like, what the heck happened? And no idea what happened. So, it's not like there's a bunch of people that work here. One of the mysteries of the world, I guess you might say. Anyway, we'll have to investigate further. Maybe glue the door back together. Anyway, that's just like I said, one of the mysteries of the world. You know, it's like, how the heck did that even happen? How the heck? So, pulling over my show here, and let's get it back to going. And that got me discombobulated, of course, like every morning it seems like lately. It's just kind of the way it runs. Anyway, so welcome back, everybody, and my magnificent monsters of the market. Welcome back to the show. You know, the only show on the internet that tries to actually help your portfolio, maybe more important than your feelings. Try to cut down to the cold hard truth of everything. So, man, oh man, do we have some feelings to talk about today? It's kind of rough. More accurately, the lack of feelings that might soon be doing all of our jobs. I want you to picture something for me. You're at your desk. You've got your lukewarm coffee, or maybe your ice cold monster. Your 1,000-yard stare into the abyss of your inbox, and that one coworker who thinks reply all is a fun way to build community. Now imagine a world where all of that is gone. The pointless meetings, the TPS reports, the soul-crushing existential dread of another Friday, Tuesday, Wednesday. I mean, it sounds pretty great, right? Like, get rid of all that stuff. Well, according to Microsoft's AI CEO, Mustafa Suleyman, that glorious future is around the corner. He recently went on record saying that while what they're seeing is most white-collar professional jobs, the ones where you sit at a computer and slowly die inside, they're potentially going to be fully automated within the next 12 to 18 months. Wait a minute. This is not years away. This is like potentially coming right around the corner in the next 12 to 18 months. That's right. Your job potentially is a legal counsel, an accountant, a project manager. It's all about to be handled by a very polite, very efficient, very cheap AI agent algorithm. And the best part, we're paying for the privilege of being replaced. There's this delightful little startup in the Bay called Mercor. They're hiring tens of thousands of highly paid professionals, doctors, lawyers, engineers, you name it, to train AI models. They're paying them up to $250 an hour, and I quote, to hand over the keys to their own knowledge and obsolescence. It's kind of like a turnkey voting for an early Thanksgiving. You just have to admire the sheer unadulterated capitalism of it all. I'll gladly pay you today, but you get to lose your job tomorrow. Now, before you start updating your LinkedIn profile to say aspiring artisanal goat farmer, let's talk about what that might mean for your money, because here at the Morning Monster, we don't cry about the future. We try to make money from it. And the first most obvious play here is as always, picks and shovels. The companies building the tools for this AI gold rush, we're talking about chip makers, we're talking about Nvidia, AVGO, but don't sleep on the companies that make memory chips like Sandisk, which has been on an absolute insane, straight up curve. These are companies selling the shovels, and they don't really care who strikes the gold. Of course, not everybody's convinced that this is going to happen overnight. Not everybody's as optimistic as, or pessimistic maybe, as Microsoft. The folks over at Morgan Stanley who are, they put down a lot of money to be the designated drivers of the Wall Street Party. They're kind of saying that the real impact won't actually show up in economic data for several years. They think later this decade, possibly early 30s, which in Wall Street is basically Wall Street time. That's like basically forever. Like, you don't invest in that right now. But that brings us to the next phase of this whole AI revolution, because while the algorithms are coming at you, coming for your desk, coming for your job, the robots are coming for pretty much everything else. The jobs that were supposed to be safe, the ones that require physical presence, like plumbers, welders, healthcare workers, guess what? They're in the crosshairs. The poster child for that right now, Tesla, TSLA, they're Optimus robots. That's, if you want to believe it or not believe it, Elon Musk is a man who never had an understated idea in his life. He's planning to sell these humanoid robots right now, $20,000 to $30,000 a pop. So in reality, that probably means 40 to 60. They're designed to do everything from factory work to walking your dog. And they're not alone. Companies like Boston Dynamics already putting their Atlas robots to work in Hyundai factories. The robot revolution isn't a sci-fi movie potentially going to happen. It's happening, sweetheart. We might be the victims. So where's the investment angle right here? It's not just about the robot makers. It's about companies that will benefit from this new tireless, uncomplaining workforce. Think about companies building infrastructure for all of this. Caterpillar, John Deere. They're hitting all-time highs because somebody has to build all these new data centers, all these robot-run factories, all these, all the things to build the things. This brings us to a simple framework for thinking about AI in your portfolio. The enablers, the adopters, the disruptors. The enablers, the Nvidias, AVGOs, Caterpillars, John Deere's. The adopters, the companies that are going to use AI to become more efficient and more profitable. And the disrupted, or, the disrupted, let's look at not the disruptors, but the disrupted. Those are the ones who are about to have a very, very bad time. See, we're already seeing this play out in the market. Software companies, which were once the darlings of Wall Street with a nice constant income that always seemed to grow, they're just getting hammered down. The iShares Expanded Tech Software Sector ETF is down 20% just this year, and we're only like 6 weeks in. Why? Because investors, maybe big investors, are starting to realize that a lot of the software can be replaced by a single powerful AI agent running on a Mac Mini. The companies that are going to survive are the ones that have proprietary data, the ones that can build their own AI tools and integrate them into their own existing products, the ones that own the patents that you can't just copy. So what's the key takeaway here? The world is changing, and it's changing pretty darn fast. Maybe faster than any of us want to admit. Heck, I just drove from Knoxville to Jacksonville and back 1,200 miles and basically didn't touch the steering wheel. It was absolutely insane. Robot cars are here, whether you want to believe it or not. That was essentially a robot taxi taking me from Knoxville to Florida and back. Absolute insane. I basically jumped out, plugged it in when it told me to, jumped back out, unplugged it when it told me to, pushed the button to go again, and it took care of everything else. So what's the key takeaway? The world's changing. It's changing really fast. The comfortable, predictable, white-collar work and world that we've known for the last 50 years, it's about to have a paradigm shift and be flipped upside down faster than Stranger Things. And while that might be terrifying for some, for the monsters of the market, it's an opportunity to make some money, opportunity to invest, opportunity to put your money in the right spot, to bet on companies that are building it, and to profit from disruption. So do your research, look at the enablers, the adopters, the disruptors, the disrupted. And remember, in the age of AI, the only thing more dangerous than being replaced by a robot is ignoring what's about to happen. So that's it. Let's go find out how to make some money on some charts. My magnificent market monsters of the market. I guess before we talk charts too much, let's pop over and hit the disclaimer. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. You trade any of those things, you might lose money. And be careful following just people willy-nilly. Make sure that the people you follow actually make money. How do you do that? Well, I post a public audit of my account right here. Post it basically when I make a trade, this thing downloads the closed trade, verifies it, and posts it publicly right here. And here's my 1 year. I funded this account back in April 2025. So now we're in February 2026. So March, April, we'd be coming up on a year here in 2 months. So I'm at this 10 months. How much did I start with? About $75,000. About $75,000. Not too bad. Not a bad shake right there. $67,000 in the last year. That's pretty fair. Pretty fair. So, make sure that the person you follow actually makes money. There's mine right there. There's mine. So, jumping in, looking at charts, ES. I was at the end of the show yesterday, I was warning that I wasn't too keen on the way the options gamma looked. I thought we might be setting up for a flush. It wasn't hardly an hour later, we're flushing. And for 90 minutes, everything flushed. We saw gold flushing, oil flushing, S&P flushing, NASDAQ flushing, Russell flushing. We saw like $3 trillion evaporate out of the global markets in like 90 minutes. Pretty wild. Pretty wild indeed. Silver dropped back out of the number 2 spot. And I've been warning that we might see more flush out. It just showed up in a lot of charts that we may need to... This sector rotation stuff, like there's a lot of fluff. Cold hard reality of these price charts is there's a lot of fluff charts, and we're gonna have to rotate. Money's got to move to make more money. It's just the way that it's just the reality of everything. And as we failed to break out on ES, I was warning this looked like a setup for a flush. Now, the problem here that I see immediately, this looks like a 1, 2, 3, potential 4. So we may get a little reprieve for a day or 3, maybe shorter than that. And then we'll probably need a 5. Because we don't typically end crap like this with just ABC or 3-wave move. Just don't typically do it. And then if this was ABC, the C here doesn't have a 5 structure in it. At least not very clear. Maybe a little baby 1, 2 right there. Maybe a 3, 4 here. And a 5 overnight. Maybe. But that doesn't look like a 5-wave structure. So I would be more cautious that this is, proportionally, that's a 1, 2, and that's a 3. Now we can look at it a little tighter here with some fib lines. That high, that low, that high. That's hitting wave 3 proportions. It's exceeding what would be an ABC. So that's why I say I kind of labeled it a 1, 2, 3. As long as we hold under that 69.30 level on ES, this would be a 4. And then we have potential to go lower low for a 5. That's what I see right now. So caution on the downside right there. It's Friday. Markets don't like to end the negative on Fridays. Bottoms. No, you're kind of taking it a little crooked there. It's markets don't like to make a bottom on a Friday. So if we make a lower low, then this junk over here, if we actually flush on down, make a lower low, there's a high chance, like 90+%, that we're going to continue this party Monday through Wednesday of Monday, sometime Monday to Wednesday, we're probably going to make a low lower than whatever low we make today, if we make this low today. So be careful. And that's an S&P thing, not necessarily a NASDAQ thing. But NASDAQ, I mentioned, was more bearish. And this already has a bigger picture. 1, 2, 3, 4. And we're probably going down for the 5. So we still have down pressure in big tech. Right there. And it's a 3-day weekend, so but the numbers still play out. Monday's closed. But the futures will be open. That's the crooked thing. So even though the general broad market's closed, you can't trade your options, the futures are open on Monday. Russell. Now this one's a little different on this proportion right here. This was actually a correction. This was the trend. ABC, pretty clear. This hit the ABC type proportions. Now we're set to go higher. 3,100 is the upside target as long as we can hold a higher low. If we break down below this low back here at 20, right around that 25.60 area, we break below that, something else is playing out. But this head and shoulders played out. First move up, nice 3-wave retrace, and we are set to take small caps back higher again. If you wanted to play this in a way that you didn't have to guess options or anything like that, you can play with IWM just for 1-to-1. But if you wanted some leverage, UWM, Ultra Russell, this might be a chance to pick up some shares for a fair price and make some money on the way up. When you look at IWM, the upside potential for IWM, how would you know how high to go? There you go, 17%. So UWM will be looking at like 34%. It's a 2x leverage. 34% higher takes us from here. It's gonna be a pretty hefty one right here. Take us right up to around 70 from 50. It's a pretty good little chunk right there. And you don't have to worry about time decay on something like that. So there you go. You possibly get up to 82, but the patterns, my price patterns don't always work on the leveraged instruments. So I just I caution there, trying to go after some leverage. Oil. Still hanging in the, just, even though it flushed out with everything else, we still stay below the resistance and above the support zones. Support down here, top of it's here, the bottom of it's here. This box, probably just going to hang out in it. A market at rest tends to stay at rest until something happens. So right now, oil is just kind of chilling. And I kind of expect it to just keep chilling. Now, we do have downward pressure from the long-term downtrend of highs. And we've stayed below that so thus far. Tried to break out a couple times here. Grinding it. We've got this support of the roadmap line. Arcing up just a little bit. Running out of runway. So even though this is kind of like hanging here, we're probably either going to pop out or pop down before long. You know, this kind of gives us another couple weeks, possibly even into March, before we run out of room where we can just kind of wiggle in here. But I give odds to popping down because this has been a downtrend and we need one good flush out to finish up this baby. Possibly down in the low 40s if the A, B, C are proportional. And this C hasn't been very aggressive. It's been kind of choppy, overlappy. One good swift flush out would look pretty nice to finish this up. Gold. Let's see what we got. Crack-a-lackin' here. So gold has an A, B, and a potential to pop up here for a C. That flush yesterday might have been the 1, 2. We get the 3, 4, 5 right up in that area. Slightly lower high, and then we get the A, and that completes the B, and then we get the C flush to a lower low than where we stopped at the A. Just saying, gold's probably going to be choppy for the next couple months is what this is setting up for. So be careful out there. Oh, getting too heavy on gold. Bitcoin setting up for all the things I said yesterday. If you missed this path, I was kind of going through it, drawing it out. That this is what I kind of expect. An A, a B, a C, and that be part of a bigger A, a B, and then we get a bigger flush out. So similar to gold, except bigger picture. This is kind of the correction of the 4-year cycle right there on Bitcoin. Ethereum probably doing the same sort of thing. Dollar would look best what it's got if it will make a lower low, but it is holding the potential to pop higher here. That was just kind of one swift move up. Nice retrace to a 618. Opportunity for this to pop back up to the roadmap line one more time. Of course, that could have been it, and we just flush on down right here. So which way she's going to go, I don't really know. I just have my price patterns, and just kind of tells me where we might go. So we might pop up to the roadmap line, or we might go ahead and flush now. The staying above this 9650 area, 9640 area is indicative that we may have upward pressure. Pushing down below that, we're probably just going to flush it out now. The low can be down around 94, possibly even 92. We could poke through this line. This was a downtrend of highs, then it was a downtrend of lows, and we've just kind of held above it. We may poke down through it, possibly down to this level. Now, the dollar's been correcting for a while. Here's the high, here's the low, here's the high. If we did a proportional correction, I would expect it to stay above like 92.60. But things can always get a little out of hand, and we take it down to like 88 before we make a bottom. But then I expect some bullishness, possibly epic bullishness on the dollar, and absolute crush the weak dollar narrative. Push this thing up to like 135, 140. But that's probably a few years out yet. NKD, golly, got the gravel going. Still looking for that touch up there around 60, 62,000. And that might be a top for a little while on NKD. I use this as a global liquidity indicator right here. And so far it's been fairly accurate. As we push this higher, S&P tends to grind higher. But if this takes a spill, probably put some down pressure on a lot of risk-on markets out there. Apple was not immune to the pullback. I mentioned it may come back for a roadmap test. It did create the price pattern for going on up to that 295. Could fail. Amazon failed. Amazon had a rocking statistic and reaching on down for that 196 fib. Want to see that hold. I mentioned that may need one more low because that the price pattern here. It's all about price patterns, right? 1, 2, 3, kind of a 4, little baby 4. That 2 is kind of longer, and the 4 really quick. And then this 5, want to see it hold right in here around that 194 to 196 area, and then turn back higher. If it continues on down through 194, things could get a little more ugly on Amazon. Google, want to see it hold right here. If it doesn't hold here, we're coming down probably to this roadmap line area, right down around 260 to 280. And we'll test that. And I mentioned before, we may need to go test this, but we've kind of prolonged that. So which one's stronger? Is the roadmap stronger, or is this area of consolidation stronger? And if we don't hold that, then we may be in for a retest of the breakout all the way back down around 200. So first line of support, second line of support, third line of support. And that would be a gap fill too, probably. So this one's a pretty strong one, really strong one. And so there you go. That's kind of the zones on Google. If we see some downside, if we get the continuation up, 385 is the upside. Meta, not a big fan of how the fact it pushed on down a little bit, but I want to see this bounce. Keep holding the higher lows. We've got 1, 2. This will be the third, and we're still set for a path of 1100 to 1300. It's just this is probably out a while in time, like maybe 27, maybe 28. Maybe even 29. Microsoft. This is actually looking promising. We made the move up, made the retrace. We're holding right here. We break back higher than that high, right around 425. Probably coming on up into the roadmap line area, 460, 470. And then if we get above that, back test, similar to Meta, we set up a big upside potential, possibly up here, 7 to 900 on Microsoft. Nvidia, staying at rest here. Can't break through the upside resistance. 195. Can't break through the support either. So support at the roadmap line, and then support down here at 150. I'm like a broken record, say this every day. It's been at rest since August. And we made a little pop, and then right back to the consolidation. Tesla, getting a little retrace here, retrace action. Made our first move up off the low. Got a little retrace, holding right there. Is pretty bullish, actually. One move up, this retrace, that sets us up for the next leg to pop right up in here. Possibly even up here, 496. It can get pretty spicy pretty quickly. Then we could see a retrace like this, and a pop on up here, and then a retrace like this, and a pop even higher. So as long as we hold in here, the support level right now is 405. Want to see it hold above 405. Get below 405, something else. We'll have to update that. So Monday will be live talking about crypto, if you didn't know. This, I mentioned for several days, I've had a warning that this price action, this push below this box, set us up for a trip down to the 60 to 70 zone. So we're set for a visit down here. And we're just about halfway there. From this box to that box. All right. I go pull gainers in the market, pre-market. I go pull decliners in the pre-market. This thing's moving up $2 or more, or down $2 or more. Put them on the list. And we hunt for opportunities in there. I also bring, that's interesting that that list is not the right list. Huh. Wonder what the heck is going on there. I'll have to delete all these out. Definitely not the right list. I did that twice now. And I know I copied the right one today. Just didn't. It's kind of weird. So the actual list. Started out with AMAT. Let's do this like I did yesterday. Post it in here. Copy it from a different source. There must be a glitch on my main desktop for the copy function. So here's the actual list. AMAT. Popping today. If you didn't get your Valentine Day, like if you don't have TradingView, your opportunity right here. Get some I have the premium one. That's the one I use. Right here. It gets you like 400 technical alerts, 400 price alerts. That's 800 alerts, 2 watch list alerts. And if you're like, I need a little more than that, you can go on, grab this one, but it's a little more, a little spicier there. This one right here ends up being like $200 for a year. It's not bad, especially if you use this. I use it pretty in depth, and you can. I get no. I probably have a commission link, but I'm not even telling you to do that because right here, I just use this tool every day to get information about the markets. And if you draw on one thing, like if you have it on a laptop or a desktop or tablet, you draw it, then all that follows you on the phone if you put the phone app on. So super handy dandy. It's just a tool I use. So you got 2 days left, 2.5 days left to jump on it. AMAT's 400 upside target. KLAC. This looks like we're on the way back down to the roadmap line there. Roku. That's a back test of the roadmap line from the bottom. Potential to continue down. Coinbase getting a little pop, but quite honestly, I think we're set to come back down to this 80 to 90 area right down here on Coinbase. That's what I think we're gonna do. I think I'll put a I think that's where we're going on Coinbase. If you're a little more optimistic on the upside, sorry. That retrace looks like we're going to go a little deeper. And it may not even, like this possibly not even done. I mean, this maybe not even finish it up. We may do something else a little crazier. And this could go on a little longer too. Like this could be the first move down. We get a retrace, another move down. I don't know. It may or may not wrap up in the same time frame as Bitcoin, but it definitely is tied to Bitcoin. ANET's potential to pop on up to 173. Korea has just kept on being a beast, but seeing some pullback today after the market opens. It was up in the pre-market. Some gold stuff popping around a little bit. SEI hit the target. Watch for the retrace. Airbnb. And those earnings popped up, holding under the roadmap line. This could be a 1, 2, 3, 4, and we could see a fifth wave move down. That could be an A. And this is cautious. If we complete that 5 wave, then we see a 3 wave. This can be continuation even lower on Airbnb. Advanced Auto Parts. Now, compared to O'Reilly and AutoZone, this chart looks freaking bad. If you've not seen AutoZone, this thing might take a bigger correction, but this has been a beast of an uptrend. So, little correction, no big deal. O'Reilly, same situation, a beast of an uptrend. But then you look at AAP, and you're like, what the heck are they even doing? Obviously, if you actually get your crap together in the auto parts, you can do good because AutoZone and O'Reilly rock and roll. But these guys, who knows? Like, I wouldn't touch this chart. It's not a turnaround story for me. That's doesn't have enough candles to do the roadmap line. LRCX probably moving on up to 268 AEM. Watch for the retrace to the roadmap line. That's been a long time grinding. Reddit probably coming down here. Maple Bear probably coming down here. Nice little pop, but probably coming down here. Royal Gold probably coming down to the roadmap line. MSTR. We tagged the downside. I think the next potential is to rally back up here. So unlike Coinbase, MSTR may be finished on the downside for now. Now, if it's not, probably going down here. Back down to like 70. PPLT coming back to the roadmap line. SIVR coming back to the roadmap line. PALL probably coming back to the roadmap line. This sets up a very big upside potential on PALL. We did close above the 618. This could shoot all the way up into the 360 to 430 area on that next bounce. Rivian. Man, that's choppy. That's like a leading diagonal kind of thing. When diagonals end, they tend to come back down near the start. So watch out for it to break through this uptrend of lows. We could come back down and kind of make this double bottom situation before we get the bigger up on Rivian. If it's going to make a bigger up. Silver, everybody wants to know, how low can she go? Probably not 0, but she's coming back down to 55 more than likely. CLS, about to touch the roadmap line. WPM, probably come back to the roadmap line. A lot of people don't want to hear that, but probably the truth. ZS, see scalar, that broke the uptrend. Watch out for the bigger flush. Down here's the target. Logitech. So there's potential that's 5 up. But it's also potential that's a correction at a lower high. Probably need a retrace. So was this the first move? Was that the first move? That's the retrace. That's the next first move of the next. Because we're right at the 618. So if we break back above the roadmap line, it tells that this low is going to hold. If we break below this area right here around 78, we're probably cruising right down here around 58 to test support. And then we'll see if we can bounce or if we're going to crush and get a lower low down around 37. kind of the outline for Logitech. Yeah, I mean, I'll leave his Logitech. LB. Yeah, downtrend. Merc. And I thought Merc was going higher, and the target's right up here around 140 to 150. Man, if I had held into that, I was down here at 70, 80. That would have been good to hold on to, but I just couldn't. Beta's too low. Didn't pay enough to keep doing like the covered call thing. Ugly. Probably coming back down. GB, yeah, junk. Sprott. Now, if you want to buy silver, highly recommend you play this one instead of SLV. SLV does not have like the actual SLV, without the R, they fail their audit. This one passed their audit for physical silver. So if you want some physical silver that is backed up, get the SLVR. It's a risk, existential risk to playing silver. As you play SLV or even GLD, they fail their audits. They don't have the physical silver to back the paper contracts that they've issued. Frog. And retrace. Can we hold it? Do we fold it? That's a lower high so far. If we can break back higher, it'd be good. But this could be correction complete. A, B, C. This move up. This retrace. And we rejected at the proportion for an ABC. A, B, C. Trend was down. Correction. Continuation. Be down. I'll just be cautious there. See, a lot of this stuff, like hard drives, needs a correction. That is fluffy. I was talking about this. Memory needs a correction. That is fluffy. Full of loft. WDC, full of loft. Baba at support. Looking for this to bounce and break out. 200, maybe 230 on the upside. Ferrari coming up to resistance. Then do we reject or do we push through? That's the area to watch right there. If we get through, it's more bullish. If we reject, probably going back down. At least a 618, if not lower low. I could easily make the case for this to come on down to 300 on the charts. Ryan Specialty Holdings, excuse me. Ryan Specialty Holdings. Punished. Let's see, that's Whirlpool. Punished. Jeez. Pins. Dang. That got punched in the face. Holy moly. Surprise. Wow. This Pinterest not doing so hot. SBIT and DKNG. So with Polymarket, these guys kind of screw betters. So with Polymarket and Kalshi come on competition, and they're just based like on crypto and stuff. Can DKNG survive? I don't know. AA potential to pop on out to 121. Twilio still correcting. Southern Copper. Watch out for this baby. It can definitely come back to the roadmap line here. NXPI, chopping around a bit. ORA, probably coming back to the roadmap line. Bloom Energy, probably coming back to the roadmap line. Again, chopping around here. All right, popping back over 2 setups I brought today. ABBV. And watch out for that right there. Don't like the choppy nature of this one, but here's the high, here's the low. Entry, 242 target, but it also has the bigger target, 251. And Apollo Algo wins 90% of the time, so, but that's only 10 trades, so it's not statistically significant. And it didn't flag this as an entry because this consolidation took too long. PEPG, and this one did fire off, but it has no history at all, like one trade in the past. And $8.38, so this is low price stuff also. So I would be very careful and cautious. Low price stuff is dangerous. Stop is always $1 below the low, so when $4 is the low, that's 25% just to get $1 lower. And that's on top of the fact that you'd be in right up here, and your target is only 8. So you got a $2 upside and a pretty big stop. I would be careful on that one. Very, very careful. All right, looking at the... So lately we've been looking at SPY and QQQ and trying to predict kind of the gamma exposure and where we might end up. Yesterday, I was warning you about the weak levels and we might break out of the box, and that's exactly what we did, and just kind of kept flushing. So then here we are today. Oops. Pulling stuff around. I'm not meaning to pull around. Let's pull this down. Let's see where we might end up today. SLVR is physical silver, not miners. It's Sprott fun. Well, it's miners and physical silver, but Sprott passes their audit, whereas SLV does not. And all right, pull the gamma chart over. That's the. Let's just reload it. Make sure we get the freshest data we possibly can. This is bullflow.io. Links in the description if you want to get a piece of this. And there's no bubble. That's no bueno. Well, the bubble's red, I guess you might say. But it looks like we may have downward pressure to 670. And big level down there at the monthly. So... Oh, man. Looks like... Yeah, 670. And we'll go 686 on the upper end. So 686, right where I put it, and 670. It's going to be a bit lower. So the flush out may continue here today. Let's check out the levels. Big chunk of puts right there at 680. Today is a Friday OPEX, but the monthly next week is dwarfing today a little bit. Got more call players today. People looking for a bounce. Optimistic. So we may pull this down to say 679 or lower. She's already been down there today, so that's where I'm gonna go with right now. All I'm doing really is kind of balancing the purple and the yellow where I think we might hang out. You'd be like, well, put players would make money there, but there's more put players out the monthly than there are today. There's more call players today, so screwing the call players, 679. There's not many call players down in here, so. And then this updates live, so it changes constantly. The whole story may change by noon. So be careful. And then Yeah, look at that 675. We may go down and visit that. Be careful. QQQ. The big level for today was 685, and we went down there yesterday, and now we got even lower. So Qs for today looks like we got 600 is the big mama level, big mama jamma. But we got stuff all the way down 590. Yikes. We can go 590 up to 608. That definitely got out of the box yesterday. I said 608 right there, 590 on the downside. Expand the range a little bit. So that's the range I kind of foresee in the market today, based on the gamma, which is just the options players. Let's see where we got them stacked in here. Today's the 13th. Not many call players, bunch of put players on NASDAQ. It still the NASDAQ's still soft. So we've got this, it's almost like a standard deviation here, bell curve. And we may hang out around 600. Wouldn't surprise me to hang out at 600. So we may take a trip down and come back up that big level on the gamma is at 600. So it's not just where this biggest spike is. It's not just where, I mean, it is, but it isn't, like, because of that. So it's like that tells you where expiration wise people are playing too, because you have a bigger level today than you do out here. So the puts are more spread out on the monthly expiration. But we're in the red zone, so that means that negative gamma, that means the market makers are trading in the same direction as we are to hedge their exposure. So that means down moves get exacerbated with selling from the market makers. Up moves get exacerbated by buying from the market makers. So that's why the price tends to move faster when we're in the red zone here. So be careful out there. It might be a little chaotic today. And I'll be on Market Masters at 11:30 with Jack. I got put some TSLL. I'm gonna show what I'm doing with that and trade that live. Otherwise, see you later. I'll be back Monday, do some crypto, and then back to normal on normal market day on Tuesday. Have a great day, everybody. Stay safe out there. I'll be doing the beer money trade later, as long as everything looks okay.